Well, it is all eyes on the election this week as traders brace for volatility, awaiting the results of the election. But that is not the only news event that we have going on this week that could cause chaos in the market. So I'm going to get into what you need to be aware of for this week and how we could possibly trade this if you even dare. If you're new here, welcome. I'm Annie and this is Trade Travel Chill. If you're returning, welcome back. Be sure to smash that like button nice and early and hit subscribe if you're not already subscribed. Now let's get into this week's open. So starting on the daily time frame for Bitcoin, we can see we almost made it back to the previous all-time high on Tuesday last week, wiping out quite a bit of liquidity. I've left these levels here so that you could see what liquidity actually got taken on that move up. And we knew that there was a big range up to the all-time high, but there wasn't a very large level above it at that point in time. So all of these levels are gone now. And following that, you can see that price then retraced back and took out these levels here. So these levels would have been created by people going long at the very last moment. So people who went long on this final push up here ended up getting liquidated when price came back here to around about the 67,500 area. And when we have a look at what we've got left, we can see that there is still quite a bit of liquidity down in this area between about 64 to 66K. And if we were to retrace all the way back there, it would still equal just a retest of the daily time frame broadening wedge. So I wouldn't really be too worried if we did come back into that zone. And in addition to that, it's around about the 50 EMA on the daily time frame, depending on how long it took. If price took a long time to kind of trickle down into this area, another thing that could happen would be that the 200 EMA, which is the yellow one right here, would also start to do something like this. And so it could be that we end up with either a retest of the 50 or the 200 EMA. Whichever one of those happens, I still think is bullish, because it would create a higher low. It would also come back to recover some of this fast moving vector right here. And so on a macro scale, I'm not worried about this pullback, regardless of the election results. As long as we hold somewhere between 64 to 66, I think we're still in a bull market and I think we're okay. But that's kind of the key that we really want to hold right now. Now, the next thing that we need to work out is, okay, if that's our lowest level that we're sort of okay with, is price even going to continue down there? Because we do have a wick here off the 20 EMA, and today's daily candle that is halfway through is currently holding the 20 EMA as well. So we may not even get a pullback that deep. And we're going to have a look at the lower time frames to see if that is a possibility and whether or not the lower time frames are showing us anything bullish at this point in time. Before I do that, however, I want to have a look at the heat maps to see where the current buy and sell orders are, because they're going to give me a better idea as to whether or not I'm going to get my 64 to 66K entry. Looking at coin futures, so coin futures settles in Bitcoin. So this would be people longing Bitcoin on leverage in the hope to accumulate more. They're actually looking pretty close to price currently at about 68,200, just a little bit above there. They're looking to hold that level. There isn't a lot below that, but we can see that there are quite a bit of shorts above price as well. So if the price were to move up from here, there's a few levels that we have to be aware of. And I just realized my mic is so far away from my face. So hopefully that all came through okay. But anyway, so we're looking at 69,600 all the way up to about 71,225. And the risk with any of those triggering and causing a rejection is that it could create a M formation on the daily time frame, which would then be bearish. So it's not bearish yet, but it is definitely something worth looking out for. So this is that zone where those sell orders are. So if we did get, say, a bounce off the 20 EMA, we pushed up into those sell orders, any of them stayed there at the time, because as you know, they can get pulled right before they get triggered. But if they stayed there, they got triggered and they actually caused a rejection, that would end up creating a daily time frame M formation. And it would also mean that it's an M formation after a rise level 3, because this is the rise level 3 right here. Okay, so we do have to be aware of this. really what we want to see, if we want to remain bullish, we want to see us break right through this zone. We want to see Bitcoin get back above at least 71,200 to know that all of those orders have been taken, and it's likely that this was a higher low that just came back for a retracement before we eventually push through to the upside. Now, I'm not saying that that's going to happen this week. It's absolutely impossible to say. I know people are expecting a lot of volatility. One thing that could happen is absolutely no volatility because everybody will be hands off trading. So it's really impossible to say. And all I can say, like my best advice that I can give to you this week is, if it's not obvious to you, if the trade is not smack bang obvious in your face, just don't take any trade. Like, I don't think I'm going to be trading much this week. I didn't really want to do this video because I don't want to put trades out there if I wouldn't personally take them. So this video isn't really about giving you a trade. It's about just showing you what is happening now, where the liquidity is, and helping you make your own decisions. But 1 week without trading whilst we wait for this whole thing to settle down, it's not going to kill you, and it could be the thing that saves your portfolios. One thing I always tell my community is weeks like this have the opportunity to wipe out all of your good weeks. You know, if you start forcing trades, if you ignore all the signs, if you ignore the fact that we're in super strange times where we don't know what's going to happen, everything is very, very uncertain. Sometimes you're kidding yourself if you think you can pick it. So just be honest with yourself. And if the trade is not there and it is not ridiculously obvious, just don't take a trade at all. You know, just wait it out. Something more obvious will come once this is all settled, and that's when it's going to be a better time for you to trade. Now, one thing you might like to do if you are sitting out of trading but you are good at bot trading, you might want to consider entering this Bitget competition that they've got going on right now, where you can grab your share of up to 80,000 USDT. Anyone can join the competition and everyone has the chance to win a share. There is 60,000 USDT trading bot volume leaderboard prize pool, so you can win up to 15,000 USDT of that per user. There's 20,000 USDT of ROI leaderboard pool as long as the user has at least one trading bot with a positive P&L. And Bitget is also covering the trading losses up to 200 USDT per user. So the challenge is open now, and the link is in the description of this video. You can click on that, grab yourself a Bitget account if you don't already have it. Just a reminder, if you use the links in the description of this video to join the Bitget exchange, you do get 20% trading fee rebate for life in addition to this current promotion. So once you have created your account, you can then just click on this register button to enter yourself into this challenge. Now, another reason we want to be a little bit careful this week is because we did see towards the end of last week, there was a little bit of a sell-off in the S&P. It currently looks like we're trying to reclaim the 50 EMA. So keep an eye on that. If we can successfully reclaim it over the next couple of days, maybe there will be a little bit more upside, but all of these things are still in the same risk that Bitcoin is, where any recovery, unless it creates a higher high, has the risk of creating an M formation over the period of this election. So just be very, very careful about that. It is positive that we're trying to reclaim the 50 EMA, but it does still have currently a little bit more work to do. And when we have a look at NASDAQ, it's a little bit different. We can see here that we've actually created a lower high. So we returned to this area of interest. We didn't break all the way through it. We did have a little bit of a sell-off. Again, the positive is that it's holding the 50 EMA. So if it can break through that, considering we've come this far through the area of interest, as long as we hold above this 50 EMA, it's likely that eventually we will break right through it. But it's very dependent on that 50 EMA right now. So these candles aren't looking all that strong to me. There is still a high chance that it's going to break down from that. And if it does break down from that, then what you're looking for next is a lower high that will act as a retest of this 50 EMA. And if you get that, we would then expect actual further downside. Now, if that happens on S&P, so if S&P gets the M formation and NASDAQ gets this lower high formation that breaks the 50 EMA, you know, we might see a little bit more of a sell-off in the stock market. And then that is also not going to be great for crypto. It will likely roll over and affect crypto as well. So it's definitely, you know, just because of where we are in what is happening this week, we definitely need to keep an eye on that. that. Now, the other thing that we've got going on besides the presidential election, which they start tomorrow on Tuesday, we've also got the federal funds rate FOMC statement on Thursday. That's just another huge one. And this could be the thing that causes volatility, because the election is essentially like counting votes over days. It's not a sudden event. Whereas the statement comes out, that's kind of an initial reaction. Then we usually get a second reaction at the press conference. So yeah, it's a highly volatile week, and why I'm saying it might be one that you just sit on your hands and just learn. The weeks like this are amazing weeks to learn as opposed to actual physically trading. Now, when we look at the 12-hour time frame, I have shown this chart before, actually fairly few times on this channel, where we had this rise through here, we had the flag, we had this breakout, which is your rise level 2, and now we are retracing. So we've broken through this area of interest and it's no longer relevant, and we're now in the process of this retracement. So this play that I've given on previous videos of mine, it's still an idea for me at this point in time. It might be that this does come down, tap into some of this liquidity, then we get our higher low out of it. This is if we're going to remain bullish. That would be the perfect setup off the 12-hour time frame to get a long entry. And because it's a 12-hour, by the time all of that happened, it would be a week or two, maybe even 3 weeks away from now anyway. So we'll be clear of the FOMC, we'll be hopefully clear of the election stuff, and we'll be back to free trading again. So this is something I want to keep my eye on. Right now, again, it's holding the 50 EMA, so it may not break down any lower. However, if it does, the 64 to 66 is going to be my area of interest. See if that's the end of the retracement, and then see if I get some kind of bullish vibe out of that worth trading. Because on the 12-hour time frame, there should be another rise to come. So I'm not turning bearish yet, unless of course it's a news related reason to turn bearish. I am, according to the model, expecting another rise, and I'm looking for retracements to give me the best entry. Now let's have a look at where we are in the model so far, so that we can sort of get an idea of what might happen for the rest of the next couple of days. What we can see last week that happened was Bitcoin put in its high here on the 1-hour time frame, and that created what is the current high of the week. After that, we went into this sideways consolidation. This is called a trapping volume formation. What it means is after you have these rises to the high, there's a final damage kind of move that traps traders at the very last point, and then we go into consolidation for an extended period of time, usually more than a day. Over here, it lasted 2 days, and that consolidation never returns to the previous high. And the reason it doesn't do that is because it's trying to keep these traders trapped whilst the market maker accumulates the balance of their positions. And then when they're ready, they swiftly move away, which is what you can see happened here. And this ended up essentially forming the midweek reversal. So this here becomes our drop level 1. Then we had this pump here, which was a post-news event, a fake pump into Friday. This is what the Friday weekend trap looks like. And that happened during the US session. So it's really, unless you're a super advanced trader, it's really not worth trading the US session on Fridays. It's better to close your trades in the UK session so that you can be free of volatility like this. But if you're advanced and you know what you're doing, you can go for it. So this ended up creating our drop level 2. And then through here over the weekend, we actually got the drop level 3. So that would then mean that now, because it's a new week, we have to reassess. We have to see if this low of the week is going to hold and give us some sort of information that we're going to turn bullish from here, or are we starting fresh again and we're going to see another 3 levels of drop? I think this highly depends on what the stock market does personally. And if the stock market does not give us a move to the upside, especially around US session today, then I would not expect Bitcoin to continue to the upside either. Now, I am in a long position myself personally, because in the TTC community, most of us were trading last night. We like to trade the false move week beginning together. And so if I show you on the 15-minute time frame, this is what we were trading yesterday together. We saw the final spike to the downside. We saw the return that created a higher low, and this is where we entered a long position. So at this point in time, I still have my short position open, by the way, but I did open a new long position here, and I'm currently just waiting to make sure that this initial low of the day here, that's at about 68,550, I just want to make sure that level holds. I'm going to stay in my long position for as long as that holds, but if we break below this, I'm going to cut it, and I'm just going to stay in the short position, because what I don't particularly like right now, if I go back to the 1 hour time frame, I don't like that we haven't broken up with volume, number one, and that we've had multiple rejections of the 200 EMA. So this is leading me to believe that we may actually get more downside. However, I don't cut trades unless my trade is invalidated. And right now, the long position isn't invalidated.